Welcome, I'm Catherine Magana here with Greg Carroll, Vince Stefano, and Steve Wolf. Today we're going to have a discussion, talk a little bit about the markets and some planning tips. And so I thought I'd start off with, here we are, the 1st of February. We just finished January. And it's interesting, the markets were actually up in January. I was looking back, and since 2016 to 2024, out of the 9 years, the stock market's been up the first month of the year 5 out of 9 times. So in the past, they said, the January effect, and January is always up. But the reality is, based on the last 9 years, it's kind of a toss-up if the market's up or down. And I know we have a long-term perspective, but sometimes it's fun to go back and see, how did we start off the year? And
but there is a correlation between January being up and how the rest of the year does. Yeah. Now, it's not guaranteed, but every time that's been up in January, not every time, but recently, the market's been up for the year. So hopefully that is the case this year.
Yep. And then we have, right now we have earnings season, so we're going to hear from some of the mega stocks today. And I know we've been hearing a lot from
Meg 7.
The Meg. So that's coming up right now. And we have, some economic data that just came out, and just there's some interesting news out there.
All right. Well, the Fed was out in force yesterday, I believe it was. And they came out and basically said that they are not ready yet to lower interest rates, which doesn't come as a surprise to us because we've been talking about that. They did say that they're waiting for, this is according to a report I'm reading here, that they're waiting for the economy to slow down to about 2%, which we know, and we're still at about 3.9%. So they're not quite there yet. Powell said it's unlikely that in the March meeting that they'll take that down. And I think the market got a little ahead of this anyway. We talked about this where they had like 6 or 7 or even 8 cuts forecasted for this year, and it looks more like maybe 3 if it's going to happen.
I think the Fed's own plot for that would be 3 reductions in the interest rate. Why the market thinks it's 2 times that, I'm not really sure.
Again, getting ahead of itself is being a little bit more optimistic. And of course, when he said that, the market took a little bit of a tumble yesterday. Today is Thursday, February 1st. But I see where, it seems to be up a little bit today. So I think that the market itself, generally speaking, has what the Fed is saying already in sight. They're looking ahead to that. Some of the stocks are probably ahead of where they should be. And so it wouldn't surprise us greatly if there's a pullback. It should be normal. But earnings are going up in a lot of those, especially the tech stocks. So we're not terribly surprised that tech is leading the way again.
It's kind of funny that the Fed has been very clear about their intentions when they started raising rates and how far they were going to raise rates and hold them up there once they got to the peak rate. And yet the market hasn't seemed to believe them at all. And then they get ahead of themselves like they did the last couple of months and ran up because they think rates are going to go down 5-6 times this year. But even Powell said yesterday, I was surprised, he said what they see right now, they do not see the rates going down in March.
I think the Fed's being really cautious. I think they're just, and every word they're saying, right. Everybody's listening to every single comment. So I think, as we've talked in the past, we don't expect rates to change in March, but maybe in the summertime. But we'll see. Anything can happen between now and then, and things change.
At least
daily.
Now it looks like they're ahead of the curve. They may be a little bit slow in reducing rates, but they were so far behind the curve when rates were almost at zero.
For a long time, too.
Right. Way too long.
Well, and it's an election year, and Powell has to be very careful that he doesn't look like he's favoring one political party or the other. So rates, he's going to be very cautious with rates. And when you look at other, items that came out today, I saw that the ISM Manufacturing Index came in at 49.1. Well, 50 is neutral. And so we're right around neutral, which means that, the manufacturing is not gaining steam very rapidly. So Powell doesn't have to worry about that. Initial jobless claims came in at 224,000, and that's okay. There's some softening in the labor market, and that's what Powell looks at. And one of the things I saw just before we walked in, I saw that oil futures were dropping dramatically because Israel and Hamas seem to have agreed to some ceasefire proposal. So I don't know how the overall market's going to react to that. I know that, I've been saying I can't believe oil futures have been down so much with what's going on in the Middle East. But again, this was just a squib I saw. It was a headline. So we'll see how the market reacts to that over the next few days.
So I know in the past we talked about AI. So it's interesting. My radars are up, and I saw in the last couple of weeks the robot dogs from Boston Dynamics, and so I was like, wow, that looks fascinating. I think they're intended more for police work, and but what I came across was they're actually these dogs are now creating art, and there's a marketplace now for these dogs to create art, and they're selling these art pieces. So they're now assigning emotions to to the dogs, and that's interesting to see how this is going to evolve and what these robotics are used for.
When you talk about robot dogs, I'm sorry, I can't help but think about the movie Sleeper. It was a Woody Allen movie, and he was in the future, and they had this robot dog, and he was a pet dog named Rags, and so when Rags walked across his living room floor and squatted to go to the bathroom, he deposited 2 batteries on the floor. I have this image.
Well, yeah,
I think of the Jetsons when you talk about robot dogs and Astro, I think. So
well, think about how if you want a dog and you don't want to take care of it.
You
just
can
get a robot dog.
Right, that's
you
a great idea.
get a robot dog. You don't have to take it out for a walk. You don't have to pay vet bills. You don't have to do anything.
What are the robot dogs for?
What are they doing?
Well, I think originally they were designed more for police. And then there's been, now they're being looked at, okay, well, there are other ways we can use some of these.
They can do abstract art.
Or you can be like Greg, and Greg doesn't have a dog, but he dog sits. So.
Yes.
So what you're telling me is that German Shepherds are now complaining to Congress that they're going to be losing their jobs, right?
Exactly.
I still like the human aspect of animals. And then another thing that's come up a lot recently is kind of these airplanes and the maintenances and bolts falling off, and I don't know if I want to fly anytime soon.
Doors flying open.
So.
It's just a slight problem of a door flying off in mid flight.
I guess it depends how high you are when that happens, whether it's a serious problem or not.
Well, I don't know. There's people who die from falling from 15 feet, so I don't know.
Well, I think you get sucked out if you're up high enough, so if the pressure's not so bad.
Right. Actually, I would think that right now, though, all these bolts are being checked and double checked, so that problem is probably not the next problem to happen. It'll probably be something else. But the airplane companies, it's probably affecting them. I mean, Boeing has been in the news way too much.
Yeah, I know. It's definitely something on their radars looking at this.
How do you not tighten all the bolts on a plane?
That's a good question.
Yeah, and a lot of the carriers stopped. They decided to push back on the Boeing orders because of all these bolt problems. So again, it's just something that the government has to look at it. They have to get involved.
Of course, there's only really 2 major companies that make
Airbus and Boeing. That's
so
it. So they're looking at the bolts. They
may delay orders, but they can't cancel.
They can't cancel. Yeah.
I haven't looked at the CNN fear and greed indicator. The last time I looked at it, we were near extreme greed. I've got to believe that we're still there because of the way people are reacting to stocks. Now, the other thing I read, too, is that there is a ton of money that is still on the sideline. And they have missed, for those people who haven't put it in the market, they have missed a really good run over the last year, especially over the last maybe 4 or 5 months. This FOMO, fear of missing out, at some point, maybe it's happening now, will play out, probably.
Yeah, I think that's usually when the money comes flooding out of the safe accounts, the money markets, the treasury bonds, and into the stock market. That's usually the sign that maybe you want to be a little more cautious.
So what do you think about treasuries right now?
If the Fed is going to lower rates later this year, you can go out 3 to 5 years in treasuries and you probably do pretty well. Locking in a little more duration because when they do start lowering rates, those money markets paying 5%, are going to drop down to 2.5, 3 really quick.
Right. Maybe it's one of the good reasons to have a laddered bond portfolio.
Absolutely.
So you go out into the future, and at some point it will return to normal, where when you go out 10 years, you're going to get more return than 1 year, as opposed to the way it's been over the last, year and a half or so?
Almost 2 years. I think it's been inverted, hasn't it?
Right. It's been inverted for a long time.
Yeah.
That's got to change at some point.
So over the last several weeks, we've had a lot of clients that have had illnesses in families or death of spouse or family member, and it really hit home. I was talking with Carrie and Naomi in the office here, and they were, acknowledging how many clients they've had to work with, and it just reminds me of, we are here for the good times and the bad, and we really try and make it really easy for our clients as they're going through these types of situations. But it is hard to lose a family member, but when we try and be really sensitive to each person and their needs. And but Carrie and Naomi, especially Carrie, is amazing and really, tries to make everything really, really easy for our clients as we have to make that transition and helping with accounts. And like I said, we always like to hear the positive things, but unfortunately, that with life and things happen, we're here for our clients in that regard too. And that's what we're here for, is to really not only invest but help them with their planning and estate planning too.
And at the beginning of the year, it's a good time to look at beneficiaries.
Yes.
Who are the beneficiaries on your IRAs, your 401ks, old retirement plans that you might have out there. I had a client pass away here recently, and he was in a second marriage. Mm-hmm. And so his spouse is very concerned that, she's not going to get what she should get because the daughter will probably get some of it if some of it wasn't titled properly. So she was a little upset.
Well, we actually had a situation that the exact thing happened. This is quite a number of years ago now, but the person who died had an ex-wife. He was in a relationship with someone else. He kept saying he was going to change the beneficiaries, but he ended up with a massive heart attack and died before anything was changed. Right. And it was a massive problem. So you really want to look at your wills, your trusts, make sure they're up to date. Make sure that those people who are your beneficiaries are the ones you really want.
Yeah.
Although I suppose when you're dead, it doesn't really make a whole lot of difference to you, but it's going to make a difference to those people who are fighting for your fortune.
Exactly.
And then another kind of thing that came up this last week or so is stock options. So sometimes our clients have stock options or things that come due and they have to exercise. So through planning and looking at what's the impact, we're able to kind of look at that and help our clients through that process. So
we were talking about auto loans versus buying. Do you want to lease? Do you want to buy? We help people with that type of thing. Just about anything financial, we help with, and then we become almost friends really with a lot of our clients, so it sometimes goes beyond that.
Absolutely. I think that's part of what we're here for, is to help make those big decisions. And even solar, should I buy solar or should I buy a second home? All those major decisions.
And the same question, buy or lease solar, so there's a lot of questions related to people's financial lives that we can help them with.
Okay. Well, if there's nothing else for this week.
No, I'm looking forward to a very nice year.
Yeah, and there's a bunch of earnings that are coming out. We'll see how those play out over this particular week and next week, and we'll go from there. Until next week, we'll see you. Thanks a lot. Bye-bye.
Please stay tuned for important regulatory disclosures. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional. Wolf Weezy Magana, LLC, doing business as WWM Financial, Savvy Doc Financial Planners, and Savvy Woman Wealth Management, is a registered investment advisor with the SEC.